Welcome back and good morning. My name is Marco Settembri. I'm leading Zone EMENA since the last 30 months. I'm a Nestlé veteran, 30 plus years in Nestlé, and I'm an Italian baby boomer. So the purpose of today in my presentation is to update you on the Zone EMENA transformational journey and also to convey you how in the zone we are profitably growing and how we can grow in a hectic and vibrant environment. So, what you should retain from the picture of Zone EMENA from these figures is that beyond the numbers, there are amazing number of people, brands, and assets in the company, historical assets of this company. But anyway, there are two key numbers that I would like to focus on. Is 1 and 9. So it's 19 billion business that I'm managing, is 19% of profit that the zone is doing, and 1.9% organic growth in 2018. So in terms of geographic, it's 60-40, 60 Western Europe, 40% is Central Eastern Europe and Middle East and North Africa. I would say quite balanced because if you take into account the valuations happening in many of the markets of Central Eastern Europe and Middle East and North Africa, in reality there is a good balance geographically speaking. I have seven reporting units, P&L responsible, that represent saying 6 main categories, in which the most important one is beverages. If we talk about the environment that I mentioned at the beginning, yes, it's a very lively environment in the zone. Political and geopolitical scenarios clearly show uncertainty in the future. If you think about Brexit, I would have expected to come here and to discuss about what we are going to tackle with the Brexit situation, but for people that come from London, you know that this is something that we continue to postpone to understand what is going to happen. What is clear that is the scenario is quite uncertain, but if you take into account also the European election, so what the European Parliament will be, what the Commission will be, that influence a lot also regulation in Europe and then spill over to the rest of the zone is uncertain. Clearly the balance, the equilibrium in the Parliament and the Commission will change. But also if you take into account the tensions that we have in Eastern Europe, Russia, Ukraine, but in Middle East and North Africa, what is happening in Turkey, in Iran, in Syria, in Saudi, in Algeria, and so on. Again, the constant is quite uncertainty. Disruption comes anyway from also what the consumer is shifting his preferences. How I eat, where I shop, how I connect is clearly changing the behaviors of the market in the zone. However, having said that, Nestlé being embedded in every single country, historically, very connected with the local communities and so on, can transform, and is transforming also this uncertainty in opportunities to grow the business in the future. The Nestlé operational model in the zones is simple and effective, is our Nestlé Virtuous Circle. In Zone EMENA, we are applying that Virtuous Circle since years, and we are, first of all, achieving important efficiencies in operation, factory fixed overheads, distribution, but also in the structure, in the overall company overheads. We are investing this efficiency in partially in the growth platform, in the choices that we are doing in the different portfolio, in the different categories, at the end to win. Winning for us is winning market share, winning in the marketplace. We are growing a lot market share, quite substantially in certain categories like infant nutrition and in pet care. but also in categories like confectionery and food, that in London I was mentioning that we were putting as a priority to transform these categories, to focus more on the bottom line and to reduce cost. But also in these two categories, we are seeing very good now trends, especially in the last 6 months in terms of market share, and we are growing market share. We are also recovering very fast market share in coffee because of commodity and incompatible capsule. We lost some share in the last period of last year, but we are now recovering very fast market share since the beginning of the years. We are improving the return. All 7 categories that report into the zone have improved profitability in 2018, while having at the core the people, the teams, the citizens, and the society. What more specifically for Zone EMENA, how we are organized in the Zone EMENA. In London, we made you known the fact that we were transforming the Zone EMENA in terms of responsibility by creating 7 regionally managed business, P&L responsible. And clearly, what I can tell you that we really are getting the benefit of the focus organization around the category expertise, around the consumer insights. This is giving us fast decision making. Resource allocation is more and more optimal. We are avoiding local for local decision and also duplication of assets that we used to have in the past. But we are doing that also exploiting and keeping the very high, strong foothold that we have in Nestlé in the different countries, as I said before. So the proximity with consumer, the proximity with the customer, the local presence in every single place, harmonizing the solution at the category level is giving us a lot of strength. So by combining these metrics, as Mark also was, and Patrice were mentioning before, combining the best of the category approach and clear decision making and the local presence, we clearly create a success factor of winning in the marketplace. Delivering, winning, working together, a little bit the mantra of this organization that was category and market together. And this approach is working, is demonstrated, first of all, in achieving efficiencies as part of the virtuous circle. In the left part, you see what we are getting in the zone, in the total zone, in terms of structural cost reduction, coming also from elimination of underutilized lines or assets overall. But more notably, in each category roadmap, we have clearly a roadmap of value extraction in each element and total deliver cost reduction path. You can see the example of confectionery. We were talking before about innovating a lot, and there was a fear also that we were proliferating SKUs and so on. This is exactly the opposite. What is happening is we are reducing complexity, we are reducing number of SKUs that are unnecessary, but more importantly, specification, ingredients, and so on. And I just put as an anecdote because some of the people asked me about what happened to the Santa Claus that in London I was describing the 17 different formats of Santa Claus. Now we have reduced by 75%, and surprise, surprise, the business is growing, and the Christmas campaign has been extremely strong, and now we are preparing quite innovative campaign for the next Christmas in confectionery. But the approach works substantially also in the top line, in segmentation strategy for all categories, based on innovation that we saw very extensively with Patrice and Stefan, and premiumization that was also explained. As I indicated in London, in a low inflation geography and period, mix is the new price. And so for us, premiumization is a way to really get higher price, higher margin contribution, at the end of the day, higher profitability. A mix means to grow over proportionally in the premium segments. And we are growing in the premium segments 4 times the average of the growth in the Zone EMENA. Infant nutrition is a great demonstration that this model is working. Why? Because the category was already focused, was a globally managed business. So it was already a category really focused since years in delivering great innovation. But now, by embedding the category in the zone, these amazing, harmonized, science-based innovation that also Thierry will explain in the afternoon have been implemented in a faster way, and share growth every month is impressive. If you see that every month we are growing and we are increasing the gap versus competition in infant nutrition, that shows the fact that the approach is working. Infant nutrition and pet care share an important insight in the zone and in the category approach. Parents, when obviously a baby cannot be breastfed, and pet owners are relying on the company, on us, on Nestlé and our competitor, obviously, to help them to shape the current and the future health of the baby and on the pet. This video, that is an advertising video, shows how we focus on giving the best because of our science, but also because we see the baby and the pet with the eyes of the parents and the eyes of the pet owners. Let's see this video. Purina is another demonstration that the model is working. It was the first regionally managed business established 25 years ago in the company, and is a strong success story. We continue to win market share. We are very close to leadership in the zone. We are already taking the leadership in the segments that we focus especially on. Coffee has been and will be another huge success story for us. With the current portfolio, innovation, and the addition of Starbucks range, we will create the condition of quite exciting future that is already happening in the short term, as I said before, in terms of market share. David will go in more details in the afternoon. So category transformation, the virtuous circle, the value extraction clearly are critical enablers to perform in the zone. But to win, we really need to anticipate and to expand our journey. So the expansion means to master what I call five extra pillars that I will describe in the next 5 minutes. That is sustainability by design, consumer and shopper centricity, competitive gaps in the operation, digitalization, and inclusive teams. So sustainability by design is a must, especially in Europe, but not only, as Mark said at the very beginning. So we will expand our product superiority, our 60-40 or 60-40 plus, so taste and health connotation, towards a real sustainable competitive advantage. So this sustainability concept must be embedded in each original concept that we will have in the future in each innovation project. Our plastic commitment in Europe especially is just a start. And Nesquik All Natural, that is one example, is a compelling innovation exactly for this reason, because we really review each single element from the concept sustainable by design. Consumer centricity. Purina is not only a great example in the core, in what we do in the core brand segmentation strategy. Consumer segmentation is a discipline that we follow in Purina, but this is also goes beyond the core, anticipation, understanding new consumer trends. And we are exploiting these new trends also through external opportunities. I describe here 3 external opportunities that we grabbed since the last meeting in London. Terra Canis, the first one, German company in which we have invested that is focused on human-grade pet food quality. Tail, investing in personalization. Tail is providing, I mean, if you have a dog, you know that your dog is special. Your dog has a certain age, certain life, certain lifestyle that is also depending on what you do. So with Tail, we really give to every dog exactly what your dog needs, also with the product that has the name of the dog. Or we are partnering with, as we have announced in the last weeks, with a leading vet clinic company, IVC, to cooperate for the best nutrition and health of the pets. Go along with shopper in his purchase journey is a key opportunity also for us. So we do it by win with the winners, and so we know that e-commerce and discounters in Europe especially, but not only, and Russia as well, are clearly the winners. But we win with our historical market execution, also expanding to an omnichannel strategy, so to follow the purchaser, the shopper in his experiences. And also we support our partner, our customer, our big partner in every market with proper specific solution to help them and to help us also to win in the marketplace. A proper governance also is needed. You know that we have categories, markets, international customer demands, and so on. Also having the right governance between and the immediate decision-making in what to do in the different situation is also absolutely critical, and that's now in the last 12 months we have mastered as well this element. Operation plays a central role to enable growth, to extract value, first of all, because I said at the very beginning, we need to extract more values from our operation, but we can and will create gaps in our operational assets by modernize, digitalize production and distribution. We see terrific results now in our operation. Asset intensity, cost reduction is improving substantially, and this will be another competitive asset for our future. But digitalization is also critical. We already seen with Patrice before. So exploiting enhanced connection system empowered by the modern devices will allow to create for each category effective ecosystems. In infant nutrition, you can see the example. You can understand what is becoming the consumer service of the future, enabled by this digitalization movement that we have, obviously fully respecting the local regulation in engaging with stakeholders and eventually consumer. The company like Nestlé, especially in Europe, but in EMENA, is and must be part of the solution and must be part of the better world creation, as Mark has already explained you. So everything that you do in the healthier kids, that is reformulating products, educating kids, in youth initiative, the launch is already 6 years of the youth initiative, first on unemployment, now on apprenticeship schemes, and waste elimination in operation are only example on how we are impacting the society in all the different elements in the zone. So this transformation is paying back, first of all, in growth. So in the last 6 years, the growth in the Zone EMENA has been around 2%. We see a strong acceleration now in real internal growth, especially in short term, in a low inflation. We really need to look also at real internal growth. You know also that we put the mix in the real internal growth in Nestlé. Structural cost reduction, we have reduced in the last 2 years 120 basis points our structural cost. Profitability, we have increased 300 basis points in the last 4 years and 200 basis points in the last 2 years in the zone, reaching the 19% that I was describing. To conclude, on the what, the Zone EMENA is delivering, and I would say also winning in many aspects. On the how, we are transforming and evolving the zone in a very collaborative way, the categories, the market, but also the society. Thanks a lot for your attention, and I'm ready to take now a few questions.
Thanks, Marco. As usual, the format is as designed before. We have 10 minutes for questions. Who dares to ask the first question? Warren Ackerman at the end.
Hi, it's Warren Ackerman at Barclays. 2 questions. The first one's on the structural cost. You showed us that chart, 120 basis point improvement. Can you maybe elaborate where those structural costs have been taken out and how much further do you think you can take that structural cost number down, with particular reference to your manufacturing footprints? You know, what do you think the right optimal number of factories is in zone? EMENA? You can answer that one first, thanks.
Okay, so on this question, structural cost, under 20 basis points, I would say is quite balanced between the different elements of the structural cost. Factory fixed overheads, yes, has been the main part, but not only. Overheads, MOGI, as you call, marketing and general overheads, we have reduced. We are not only cash flat in the zone, but also we are reducing the cash in terms of structures that we have around the market. When you have this organization, you can also start carrying certain layers, a certain duplication of structure, not only in the marketing and the generated demand, but also in the technical aspect, because you really manage the factories from the category standpoint, so you don't really need to duplicate in every single market technical direction and so on and so on. Yes, manufacturing footprint has been an important element of reducing structural costs, especially in food and confectionery. The journey is only started, I would say. We have plenty of action that we'll take in the future to streamline the factories and the lines and so on. Because you know also in the factories you take also some time also to really see the results. But every 2 to 3 months probably you heard about factories or lines closure in the zone.
Sorry, and the second one, if I can, just quickly. On coffee, you've told us before there's 100 compatible capsules for Nespresso, and you've been losing market share in coffee in Europe, particularly to JAB. And I know that you've been launching kind of aluminium, or they've been launching more aluminium capsules that have been a driver of that share gain. Can you just talk about sort of going forward, what you think about coffee, why that market share has improved, and why it can improve further with the Starbucks rollout as you put that into your machines? Thank you.
Yeah, you will see probably lots of answer in the David presentation in the afternoon. But clearly, you have a quite technical element in which the moment in which the compatible capsule enter in the market, Nespresso and Dolce Gusto, you have the element of distribution that takes market share just for the fact that they enter the market. Now we see that the share of compatible is quite stabilizing versus both system, Dolce Gusto and Nespresso, but now also we have the Starbucks opportunity. We have seen the first results of the launch. We have already launched in the first market in the zone, Netherlands, Spain, Belgium, and so on. And we see in the first weeks quite amazing response from consumer in the retail for both compatible Dolce Gusto and Nespresso. So we have not yet France, Germany, UK, the biggest market. So I'm pretty sure that Starbucks, in addition to what we are doing on the rest of the range, on the Nescafé Dolce Gusto and Nescafé Soluble, will be a fantastic addition to our coffee portfolio.
Any other questions?
It's Guillaume Delmas from Bank of America Merrill Lynch. My question is on your organic sales growth. So it's been around 2% the last few years. You've been gaining or maintaining shares in 59% of your portfolio. So should we conclude that 2% OG is a fair level for your zone, or is your ambition to accelerate that growth further going forward? And if so, what do you think the drivers will be? Is it higher category growth, or it's actually bringing this share gains to a higher level than the current 59%? Thank you.
You know quite well that the organic growth is also based on the prices and inflation. And we have delivered 2% organic growth in periods in which there was basically no inflation or deflation in most of the Western European countries. So that's already quite substantial. I'm pretty confident that 2% level will be confirmed also in the future. Obviously, I have an ambition to grow more, but really in terms of pricing effect, we really depends on, we don't bet on the inflation in the future. It really depends on many different aspects, but we don't see sign of inflation. We see some sign of inflation on some commodities, and that also could change substantially in terms of the ratio between volume and price. As a business guy, I more rely on mix, premiumizing, really winning in the mix. And then if I can only also increase prices, if commodities and the market inflation will allow, we'll obviously do it. But even without this effect, the 2% level of organic growth is fair. You have seen the first quarter, we had 1.9 last year, we had 2.1 in the first quarter, and I'm quite confident this level for this year will be at least reached.
Okay, we have 4 minutes left for Q&A. Okay, Alain.
Thank you very much. Alain Oberhuber, MainFirst. A question regarding hard discounters, Marco. You did mention that. Is it because you tackle that issue much better than in the past, or is it because they are less vital or important for you?
It's a combination of elements. Also, the discounters are changing a lot, and also we see the Russian discounter, the German discounter, the Polish discounters are already changing the way they approach the market. Instead of being 100% focused on private label, or what was the discounter of 20 years ago, now they are more open and they are becoming proximity supermarkets, close to, present in every city and so on, with a good presence of leading brands. And we are leading in many different categories. We compete in every single place, so with every single retailer, so discounters is part of the offer, is part of the consumer offer. We are now doing also in a very well concerted way. So discounter, yes, is part also of our way to reach consumer in every moment of their purchasing life, and is paying back. I would say that we have very good growth in many of them.
We have time for one more question. Yeah, you go ahead.
Hi, it's Alicia Forey with Investec. On e-commerce, that seems to be clearly the fastest growth area across the industry, and you grew 12% in 2018, you've said. Do you think that your legacy Nestlé brands are fully penetrated in that channel at this point, or is there more to go for there?
Yeah, I would say e-commerce in EMENA is not developed like in US, clearly. You see that there are certain countries in which e-commerce is quite well developed. We see UK, for instance, that is probably the most developed country in the Zone EMENA. Our portfolio, I would say, is well designed to get the opportunities to grow. I would say infant nutrition and pet care, for many different reasons, are two categories that are extremely penetrated in e-commerce, and we are very well positioned. Our share online is higher than the share offline, and that's also give you the sign that we are that our range, our portfolio, our brands are well suited for this channel. In coffee, also, we are now well positioned to really capture not only Nespresso, that is historical business built in e-commerce, but also with Dolce Gusto, Starbucks, and the rest of the range. Coffee is very well designed, let's say, to win in e-commerce also in the future.
Thanks a lot, Marco. So that concludes Marco's presentation.
Thanks.